Welcome, fellow traders, to a transformative journey into the heart of Forex trading. In today's video, we're delving deep into the art of mastering Forex trading strategies and unlocking the secrets of candlestick patterns. Whether you're a beginner seeking to build a solid foundation or a seasoned trader aiming to refine your skills, this video is your compass to success. Join us as we decode the intricacies of effective trading strategies and unravel the power of candlestick patterns. Prepare to enhance your trading acumen, make informed decisions, and embark on a path towards trading mastery like never before. Hello, traders, and welcome back to our channel. Today, we're diving deep into the world of Forex trading, exploring the best strategies and understanding the power of candlestick patterns. Whether you're a seasoned trader looking to refine your skills or a beginner eager to learn, this video is packed with valuable insights. Please don't forget to like, share, and subscribe for more informative content on Forex trading and other financial topics. So, let's jump right in. Understanding Forex market basics. Before we delve into the best strategies and candlestick patterns, let's start with a quick refresher on the basics of the Forex market. Understanding the fundamentals is essential before we get into the details. What is Forex? Forex, short for foreign exchange, is the largest and most liquid financial market globally, where currencies are bought and sold. Trillions of dollars are traded daily, making it an attractive playground for traders. Major and minor currency pairs. In Forex trading, currencies are quoted in pairs. Major pairs involve the most widely traded currencies, like the euro to US dollar and US dollar to Japanese yen, while minor pairs include currencies from smaller economies. Market participants. Understanding who participates in the Forex market, from central banks to retail traders, helps you grasp the dynamics at play. Market hours. The Forex market operates 24 hours a day, 5 days a week, with different trading sessions, Asian, European, and North American. Being aware of these sessions can help you time your trades effectively. The best Forex trading strategies. Now that we've covered the basics, let's explore the best Forex trading strategies that can potentially boost your profits and minimize risks. Day trading. Day trading involves opening and closing positions within the same trading day. This strategy capitalizes on short-term price movements, and it's favored by traders who thrive in fast-paced environments. Swing trading. Swing trading focuses on capturing medium-term price swings, typically holding positions for several days or weeks. It requires patience and a keen eye for technical analysis. Scalping. Scalping is a lightning-fast strategy where traders aim to profit from tiny price movements. Precision and quick execution are essential for success. Position trading. Position trading is the long game, with traders holding positions for months or even years. It requires a deep understanding of fundamental analysis and a tolerance for market fluctuations. Algorithmic trading. Algorithmic trading employs computer programs to execute trades automatically based on predefined criteria. It's highly efficient and removes emotional bias from trading decisions. The power of candlestick patterns. Now, let's dive into the fascinating world of candlestick patterns and how they can enhance your trading strategies. What are candlestick patterns? Candlestick patterns are visual representations of price movements in the Forex market. They provide valuable insights into market sentiment and potential price reversals. These patterns have been used for centuries in various forms of trading, originating in Japan in the 18th century. Today, they remain a critical tool for traders worldwide, helping them decipher the psychology of market participants. By analyzing these patterns, traders can gain an edge in predicting future price movements and making informed trading decisions. Whether you're a beginner or an experienced trader, understanding candlestick patterns is a fundamental step towards success in the Forex market. Common candlestick patterns. Let's explore some common candlestick patterns that every Forex trader should be familiar with. Doji. The doji is a small candle with an opening and closing price that are nearly the same. It signals indecision in the market and can indicate a potential reversal. Hammer. The hammer has a small body with a long lower shadow. It suggests a potential bullish reversal, especially after a downtrend. Shooting star. The shooting star has a small body with a long upper shadow. It indicates a potential bearish reversal, particularly after an uptrend. Engulfing patterns. Engulfing patterns occur when one candle's body engulfs the previous candle's body. A bullish engulfing suggests a potential bullish reversal, while a bearish engulfing indicates a potential bearish reversal. Using candlestick patterns in trading. Now that we know about these patterns, how do we use them in our trading strategies? Confirmation and entry. Candlestick patterns are often used for confirmation and entry points in your trades. For example, if you see a bullish engulfing pattern after a downtrend, it can be a signal to enter a long position. Stop loss and take profit. Candlestick patterns can also help you set effective stop loss and take profit levels. They provide insights into potential price movements, aiding in risk management. Combining candlesticks with other indicators. Some traders prefer to combine candlestick patterns with other technical indicators, like moving averages or RSI, to make more informed trading decisions. Key elements of successful Forex trading. Regardless of your chosen strategy or your use of candlestick patterns, there are essential elements that every successful Forex trader must incorporate into their approach. Risk management. Effective risk management is non-negotiable. Setting stop-loss orders, diversifying your portfolio, and sizing your positions correctly can protect your capital. Stop-loss orders are like safety nets that automatically exit your trades at predefined levels to limit potential losses. They are a crucial part of risk management, preventing emotional decisions when a trade goes against you. Diversification involves spreading your investments across different assets, reducing the impact of a single loss on your overall portfolio. Proper position sizing ensures that you don't overcommit your capital to a single trade, helping you stay resilient in the face of market volatility. These strategies combined form a solid foundation for prudent risk management in Forex trading, allowing you to navigate the markets with confidence and composure. Technical and fundamental analysis. Technical analysis involves studying price charts and patterns, while fundamental analysis delves into economic and geopolitical factors. A combination of both can provide a holistic view of the market. Technical analysis helps you identify entry and exit points based on historical price data, while fundamental analysis allows you to understand the underlying forces driving market movements. By integrating these approaches, traders can make more informed decisions, considering not only the technical aspects of a trade but also the broader economic and geopolitical context, leading to a more comprehensive trading strategy. Trading psychology. Mastering your emotions is crucial. Greed and fear can cloud judgment. Maintaining discipline, patience, and a rational mindset is key to success. Continuous learning. The Forex market is ever evolving. Staying updated with market news, economic events, and new trading techniques is essential to stay competitive. Conclusion and final thoughts. As we wrap up, remember that there's no one-size-fits-all strategy in Forex trading. The best strategy for you depends on your goals, risk tolerance, and trading style. Experiment, adapt, and never stop learning. Thank you for joining us today on this journey through the best Forex trading strategies and the power of candlestick patterns. If you found this video helpful, please give it a thumbs up, share it with fellow traders, and subscribe for more valuable content. Happy trading, and may your pips be plentiful.